I'm a big believer in the value of skepticism, but you never want to get so negative that you become blind to the existence of very real opportunities. Consider the case of PVH, the house of apparel brands that you know as Calvin Klein, Tommy Hilfiger, some smaller labels, Izod, Van Heusen, Speedo. PVH is a global operator, emphasis on global, with a ton of exposure to Europe, which is a major reason why this well-run company's had kind of a rough time over the past couple of years. Now, PVH reported this afternoon, and going into this earnings report, there was a lot of chatter about how the strong dollar was going to crush the company's results, as its bountiful overseas sales and weaker currencies translate back into fewer greenbacks. A lot of people were worried, even though the stock had already come down 18% year to date. But then PVH blows the doubters away by delivering some fabulously better than expected numbers. Despite taking a big hit in currency, the company still earned $1.50 per share. Wall Street was looking for $1.38, and revenues came in higher than anticipated. Management raised their full-year earnings guidance. Plus, PVH also authorized a substantial $500 million buyback, something you know we've been waiting for and talked about. Let's take a close look with Manny Chirico, who's the chairman and CEO of PVH. Learn more about the quarter and his company's prospects. Manny, welcome back to Mad Money. Good to see you, sir.
Good to see
Have
you.
a seat. Okay, now I think, first thing I think of is like, is it for real? Is this the turn? Because $500 million buyback, put money where your mouth is. It's an actual strong beat, and yet within the numbers, it's still not going in all cylinders. But if this is what you can earn with these numbers, what could you earn when things get better?
Absolutely. I think, when you think about the underlying businesses, the Calvin Klein business put on a 25% constant currency earnings increase on a very strong sales increase as well. So, that investment, that acquisition is really starting to pay dividends. The Tommy Hilfiger business, with its significant exposure in Europe, beat our internal plans as we went forward. So, we're feeling really good about those two drivers of the business. And I think once the economies settle down, it's just illustrative of what we can really deliver when we start to put the results on.
I remember when you first came on and you were disappointed with how long it was taking to turn Calvin. Was this the number that you had hoped to get, that you thought you could get someday?
Well, I think this is the beginnings of that. Okay, I really feel that very, strongly. We still have a European business in Calvin Klein that is break even to marginally profitable. We're seeing big sales increases in Europe and starting to see some margin improvement there as well. So that business is really starting to see the benefits, better product, the investments we've made, and I think that really portends well for the future.
In the meantime, U.S., not as strong as I would have liked. Some negatives next to some comp numbers. That's highly unusual. But you've also talked about how the strong dollar hurts here, too.
Yeah, right. It's the beat clearly has been driven by our international business. Right. Very, very strong. In the U.S., the challenge with the U.S. dollar is a big portion of our power brands, Calvin and Tommy, are driven by a lot of international tourists in the key markets like New York, Orlando, Miami, the West Coast, L.A. and San Francisco, Las Vegas. These are big markets, and we see international tourism down 10% in those markets. And they come here, fill up suitcases full of Calvin Klein and Tommy Hilfiger product, take them back to their local markets. So that business has been tougher for us.
I'll take back local markets. I mean, like actual merchants?
Actual merchandise that
because it's just so much cheaper.
Here, being in the U.S. market, the more promotional nature, it tends to be a greater value than you would see maybe in Asia and in Europe.
Well, now, how about trends? I haven't talked to you about denim. Somehow denim got hot again?
I would say denim has recovered. I want to be careful when I say that.
But you had talked to me, you had flagged me that denim had been weak for a while.
Yes, clearly. You've heard everyone talking about it for the last 3 years with this athleisure trend that's gone on. But both men's and women's denim as a category has started to improve. And in the Calvin Klein denim business, both men's and women's, we're seeing significant increases. In the U.S., at retail, the business is up double digits.
Well, that's fantastic.
Really been
I've been worried that maybe what would have happened is there's been such a football product that I get it at Costco, that I can get it at outlets, but it's maintaining its price point.
Absolutely. And it's not maintaining, it's actually increased. Our price points are up double digits across the board. There's been, turning that business around, as you said, it's been footballed around the last 4 or 5 years. Yeah. Brought the business in-house to correct that, rebalance the portfolio, the selling, we're really seeing the benefits of that business.
Any retailers in this country worth calling out that you're thinking are doing a really good job for you right now?
I think all my retail partners are doing a great job. In particular, with the two big brands, our largest customers is Macy's, and they do a fantastic job of showcasing the product. Our Izod business with Kohl's continues to be very, very strong, and that business continues. And our Van Heusen business with JCPenney continues to really deliver for both them and for us. So I think we've really been able to target the segments of the business with our brands.
Okay, how about this buyback? Significance, because I know that I've been pushing for it, but you give it over 3 years. Is that just a conservative way, and then if you maybe finish it earlier, or is it really just going to be staged?
I think it's going to be staged for now, Jim. I think the reality is you know, we did we got our balance sheet right-sized, I think, with the Warnaco acquisition. We want to continue to have a balanced view of that, where we will return dollars to our shareholder base, continue to pay down a portion of our debt, and make the strategic acquisitions, take back licensed business. I think that's our investor base. When I speak to them, their biggest driver for us is taking more direct control of some of our licensed businesses, continue to bring those in-house. China, Mexico, some of the other Asian markets that have real significant growth opportunities for us. I think those opportunities will start to really show themselves second half of this year into 2016.
Are they for sale, and just you haven't felt that your balance sheet was ready to take them, or is it just
a combination of our balance sheet and the way the arrangements with our licensing partners are, our ability to call the businesses at certain points in time in the future, which are staged over the next 3 or 4 years.
Okay, I sense a confidence in you that I haven't the last couple of quarters. That is me, because I've gotten to know you. You've been on the show many times. You've always been insistent that I not get too far ahead of the story. If you didn't think it was, you know, take it easy, Jim, because you know that I like PVH, and I think that you do a great job. But this seems like that you've got some momentum going.
Well, your personality is a little bit more excitable than mine, so I always try to keep you a little bit down. But besides that, I think you know, look, I don't want to say that this is the turning point in the business, but we're really starting to see the benefits of all the investments we've made on the Calvin Klein side of the business to really start to pay off. It is unfortunate, with the scheme of things, to have a lot of that masked by what's going on with currencies that all of our multinationals like ourselves are dealing with. And, you know, absent that, we'd be looking at earnings per share growth that's double-digit this year, as opposed to a business that's actually down, because we're dealing with the $1.25 of currency hit this year. That's a huge number for us.
But that must end. In the meantime, you're getting it for 15 times earnings, which I frankly never thought PVH would trade down to. That's Manny Trico. He's the chairman and CEO of PVH with a terrific quarter. You'll probably say, is it up too much? If it's up 3-4, the answer is no, probably can go higher. Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.